So like I said, in this session, right, we're going to be learning about, I can't tell, about 3 things or there about, well, 4 things. Now, let me release them out. We're going to be knowing about change your character. And let me type this thing out. This and then. Okay. We're going to be learning about change your character, not just change your character, but valid change your character, right? Valid chalk. We want to learn about VOS. We want to learn about IDM. So basically, all this thing is under structure mapping. So this is all we're going to be looking at under structure mapping. What else again am I skipping? So basically, higher highs, and lows. All right, so higher highs and lows, valid one. Okay, so these are the things that we're going to be looking at today, guys. So yeah, let's look at this and let's see what's going to happen. So basically, structure mapping, like I said, is all about telling you how to mark out your structures in the market. And now, as I'm going to start saying this, then I want you guys to start taking note of it. Well, even though we have a video recording that you can always switch and switch back to and look at. Now, the reason why I'm making this video for these sessions that short, so you guys don't get bored along the line, watching those videos. I want to like have like 1 hour video, 2 hours, 3 hours teaching particular thing. I'm just always going straight to the point. And
My love.
it's all about. Please mute your mic, mute yourself, please.
Yeah.
So yeah, I'm definitely going to be going straight to the point and teaching these things so that you can always have these short videos I can always get back to. You feel me? So now we're talking about structure mappings, right? Now let's take a look at these structures right here. Now let's say we have an impulse, right? We have an impulse. Please, if your mic is on, mute yourself. Please. If your mic is on, mute yourself. If your mic is on, mute yourself, please. Nazia, I don't know how to pronounce that name. Please mute yourself. Anybody that is not muting yourself, I'm going to get you kicked out. So basically, yeah, let's say we're having an impulsive market, preferably uptrending market, right? So create this high. If your mic is not mute, like if you don't mute yourself, I'll get you kicked out. I'm serious. Mute yourself, please. So basically, right here we have this high structure right here, higher low, right? And then we're supposed to have an inducement, right? So let's say we have something like this. Let's say we have a structure like this. Let's say we're having an uptrending market and the structure is in this format. Okay. Now remember what I told you, here is a break of structure. All right. Now there are things I'm going to be listing out right now. I want you guys to take note of it. For you to confirm a valid break of structure, I'm going to type them out. For you to confirm a valid break of structure, you need to have a candle close above the previous high. All right, must be a candle close above the previous high. this confirms what? A valid break of structure, right? Just like the way we have an impulse here, price kind of had a pullback here, right? After the pullback, had another impulse that broke that high. Now, for us to confirm this as a valid break of structure, we need to see a candle close above this previous structure right here, or above the previous higher high. We need a candle close above it. Okay. Now, for us, after we have this break of structure to the upper side, now, of course, we are expecting what? We're expecting price to do what? To drop, right? We're expecting price to drop. Now, before we can call this high a higher high, before we can call this high a higher high, we need to see price what? Take out what? An inducement. We need to see what price do what? Take out an inducement. I remember what I told you guys before in yesterday's class. The first pullback after a break of structure, it is what? The inducement. So here is what? The inducement right here. All right, so this is the first pullback right here before the break of structure. Now we need price to take out this inducement before we can confirm this higher high right here, before we can now call it a higher high. If price does not what take out inducement, we cannot call this a higher high. So basically, after price takes out an inducement, we are expecting it to do what? Continue bullish again. Once it continues bullish and breaks what? This structure again, with a candle close above it, then we confirm this to be what? Our higher low. I hope you guys can hear me correctly. We confirm this to be our higher low. All right. Now, what I'm saying is very simple. This is more like the structures we're having. So basically, before you confirm or call anything a higher high, it must take out what? An inducement. Likewise, a downtrending market. If we are having a downtrending structure, something of this nature, if you're having a downtrending structure right here, now, as you can see right here, for us to, as you can see, we already broke structure right here. So for us to call this, for us to confirm this to be our lower low, as you can see, after price was broke the previous lower low, we have this lower low right here. But now we can't just call this a lower low yet. Based on structure, what ethics, we can't call this lower low yet, right? We only have to call it lower low when market pulls up to take out the first pullback after the break or before the break of structure. All right, which is the inducement we are talking about. So like I said, the first pullback after the break of structure is our inducement. Now, if you don't know what inducement is all about, you can switch back to the video I uploaded yesterday and check it out. So you see the reason why I'm actually doing this in an orderly manner, right? Everything I'm following it up back to back, right? We did pullback, which is more like how to identify an inducement. And now the next video or this video we are doing now, it's more like combining the inducement part together with structures. So that's how we're going to be getting along till the last part. We're going to combine everything together. Okay. So right now, before we can call this, you already have a break of structure project from the previous lower low. Now price to the downside. Now for us to confirm this downsell here to be our lower low, we must have to wait for price to take out what? An inducement, which is the what? Pullback right here. Once price takes out an inducement right here, then we can now call this what? A lower low. We can now call this what? A lower low. Right now, after price gives this as a lower low, now what are we now expecting? We're expecting price to tap in what? Into an unmitigated area of what? Supply. Or rather, POI, anyone you choose to call it. We're not expecting price to what? Tap into this area here. Then we're more likely to have what? A sell. Following up some sell confirmation, can sell from here and target this low. All right. Now, the whole thing about it's just more like what I drew yesterday, the diagrams I showed you guys yesterday. If you're actually looking out for the whole strategy, I gave you guys, remember the first session we had, I did not record. I gave you guys an insight of how the strategy is all about. Right. If we're having a bearish market, okay. If we are having a bearish market, now this is the first pullback, which is otherwise sometimes referred to as SMT. Sometimes they have like about three kind of liquidity things in the market or liquidity kind of setups, right? Which is we have the inducement, we have the SMT. Now, SMT is a terminology used for smart money trap, right? Now, smart money trap is after we have that after inducement. Sometimes, like I told you guys yesterday, sometimes you might have like two or three what's it called? You might have like two or three pullbacks within one structure leg. All right, so you can see these are lower high price broke structure right here. You can see after price broke structure, right? Now this is a pullback, and price is coming again down to take out what the lower low. But now on its way down, we had about two pullbacks before what the takeout. So the first one is the inducement. Now, if there's an unmitigated POI or unmitigated candle right here, that candle is the extreme. And that is the candle you should focus on. All right. So what we have right now here is the SMT, and then we have the inducement. Like I said, the inducement is the first one after the break of structure. Then the next one is likely to be the SMT. Sometimes it is usually like three pullbacks. And these three pullbacks is SMT, inducement, decisional POI. So it all depends on the unmitigated candlestick that you see here and the pullbacks you see, right? So as for me, I always like going for the extreme. Just give me a minute. Like I said, guys, I like going for the extreme. So I'll definitely wait for price to what take out all these pullbacks right here and tap into the extreme. But this is another talk for another day, right? So we're definitely going to focus on what we have today. And but then, okay, I'm seeing your question. Sorry, is inducement same as liquidity? Yeah. Remember what I said in the first time? I said that inducement is the word you're going to be hearing often from now on. It's same thing as liquidity, right? And then you said, next person said, but then inducement is like flip. Yeah. So as and it used to work as flip. That's exactly. Now, you guys saying this as flip, it's not wrong. That's basically what they tell you, that every strategy out there in the Forex market works, right? Every strategy out there in the Forex market works. Now, remember, all we are doing right here is to bring to you the strategy with the highest what winning probability. Okay. So that's just it. Now, in this case right here, you don't even need to worry about risk to reward that much or whatever. You can understand. But when it comes to flip zones, we always want to get a certain risk to reward with target 5RR, right? Simply because of what the win rate of the strategy. Remember, I told you guys last year. Okay. So basically, that one aside. Now, I like targeting the extreme POR. Okay. So now let's not deviate from what we have right now. I've told you guys and I've shown you what a valid break of structure is, right? Valid break of structure is telling you that you need to have a candle close below the previous lower low or lower high for you to confirm that to be what a break of structure, and that would be a valid one. Now, coming to this inducement, I already told you guys what inducement is all about. It is the first pullback before or after a break of structure. Okay. Now, I'm not sure I need to give another example. I already gave you guys an example here. This is a pulse movement. This is a pullback before we have what a break of structure. So basically, after this break of structure right here, the first pullback, if this is the first pullback, then this is the inducement. So we are not expected to buy from here, from this pullback, because some people will start buying from the supply or demand here, right? We're not expected to buy here. We're expected to wait for market to take out this what inducement. And once market takes out the inducement, it confirms this to be a higher high. Now, after confirming this to be a higher high, right, we expect price to what? Go back up again after mitigating probably any unmitigated zone or something. Once it goes up, breaks the higher high, closes above it, it now confirms this to be what? a higher low. Okay, so when I get to the chart, you guys are going to understand. But before I get to the chart, I actually need to explain all this now. So I've explained valid higher highs and higher lows, how to confirm them, and I've talked about inducement. I've talked about break of structure, and then the next thing I need to talk about is valid change of character. Now we have two ways that we approach change of characters, right? Now looking at this diagram I'm about to put out right now, let's say we're having this bearish structure right here. Okay, price creates inducement, have a break of structure. Okay, pulls up to the extreme, you have a break of structure again. Let's say you have another inducement, another. Okay, so now looking at this right now, I'm trying to do a backup right here. Now I'm taking this to be a bearish structure right here, bearish market. Now this is our extreme mitigation after price took out an inducement. This is another bearish, this is another extreme, rather, extreme POI. And sitting right here is an inducement. Okay, so what are we expecting right here from price? This is an unmitigated POI. So basically, we are expecting that price will what? Come to mitigate that POI. Now, for you to confirm a valid change of character, right? For you to confirm a valid change of character, you basically need price to take out this inducement. Now, knowing fully well, remember what I said. For you to confirm what's it called? This now is a lower high. For you to confirm a lower high, basically price needs to break structure and close below. Right here, we already have this to be our lower high. Since price broke structure right here, close below, we now confirm this to be our lower high, right? And on this lower high is our extreme. That's the last lower high that if price should take out, then that's a change of character, right? Now, what are we expecting is that market should come here, take out this inducement, tap into this area here, probably give us some sell confirmation, and then we sell. Now, if in any case market fails to sell, takes out this what? High right here. Once it takes out that lower high, that becomes what? A valid change of character. Okay, once we have price take out this high right here, which is the lower high, this becomes what? A change of character. Okay. So this becomes a change of character, right? So what we are expecting now is for price to do what? Since we now have a change of character, we are expecting price to sell down, take out an inducement. Remember, every single structure we are looking at, we want price to take out the first pullback in that structure. So this is now the first pullback, right? So we expect market to take out this pullback right here, probably tap into an extreme area, and then we'll look forward, buying opportunity. Price sweeps inducements, taps into something. And this is how we'll have a bullish market, from bullish or from bearish rather to bullish market. So I'm going to go over to the chart and let's see examples of this thing. So right here is an inducement. Okay, so you can see we moved from a bearish structure into a bullish structure. Now, an example of change of character to start off with is this Euro USD right here that happened last week. Okay, now look at Euro USD. Let's pay full attention here. Looking at Euro USD right here, what can we see? First of all, to start with, you can actually see the market, hold on. Okay. Okay. So you can see the market broke structure right here. So after price broke structure right here, you can see price broke structure right here. Now, let me tell you something. Are we still focusing on Asian range indicator? We are not, just focus on what I'm saying right now, though. So we have a break of structure right here. After the break of structure, now notice something, guys. If you notice now, instead of market to break this previous low here, what did price do? Price rejected that low, right? We have a candlestick wick rejecting that low. So basically, I said that for you to get a valid break of structure, you must have price to what? Close below your previous low or high. So right here, this green candle right here did not close below. So as for now, or maybe as of that moment, we did not have what? A break of structure. So after price what? Broke structure, right here, as you can see, this now becomes what? A valid BOS. Okay. Now remember what I said. Coming to the part of pullbacks, which is what we refer to as inducement. Now, looking at this bearish leg right here, where can we say that we have an inducement? Now, if we look at this area, remember what I talked about. Now, pullbacks is another thing that we can see and we call it an inducement. Remember what I said yesterday, or the class we had yesterday, where I showed you guys how to identify pullbacks. And I said that pullbacks is all about if we are having consecutive candles moving towards a direction, we expect the new candle forming to take out the previous candle low. That will confirm what? A pullback. And once that happens, that becomes what? We can use that as an inducement, because pullback is more like an inducement. Now, defining inducement is, what is an inducement? It is the first pullback after break of structure, right? Now, if I'm to tell you what a pullback is in here, based off of what we said yesterday, now you're going to notice that market took out, this is a green candle, took out the high, but not take out the low. Another green candle form, took out the high, not take out the low. Now, this red candle form, what happened? We see that market dropped massively and took out this candle low right here. Basically, where the inducement happened is even here. This was where the inducement happened. This is what the price took out the previous candle high, or low, sorry. After it took it out, we confirm what a pullback there. But you can see market still drop lower to even come to take out another candle low, confirming this to be what? A pullback. So remember what I said, based on candlestick wise, right? Candlestick wise, if you were to mark out a structure, this is what? Impulse, correction, and impulse. I hope you guys get. Now, if I'm to use this as an inducement or anything, if I'm to confirm a structure, I'll tell you that this level right here is my inducement. Okay, so I'm trying to use this to like show you something that happened on EU right here. So remember, after the break of structure, we need to mark out an inducement. And I said that inducement is the first what? Pullback after the break of structure. Now, looking at this candlestick right here, looking at this, for somebody that wants to mark this as a pullback or an inducement, this is not an inducement. Now, where do we have an inducement? You can see right here. Before and after, it depends on where it comes from. But we always want to see that before. Sometimes it comes after. All right. Sometimes it comes after, but just know that it's the first pullback, and it's always on the impulsive leg that breaks structure. It's not always on the side, but always on the impulsive leg that breaks structure. So looking at this right now, you can see this is a candlestick right here. And this is where market what? Formed the inducement. Because price took out this candlestick high, confirming what? A pullback. But it's going to see that market pulled all the way to this point. So here is our inducement level. Okay. So basically, this is what our inducement level. So at this point, guys, after you mark out your inducement, right? After you mark out your inducement, the next thing for you to do right now is to look out for your POI to sell from. Now, speaking of POI, we have to look out for an unmitigated what? POI. And now we're still going to talk about using the shadows for POI. Now, if you look at this structure right here, this is an unmitigated what right here. This is an unmitigated what? Candle. Now, and aside that, you can see that we have this unmitigated shadow right here. Okay, so this can be used as a decisional POI. Now, like I said, if you have like more than 2 POIs or unmitigated zone. The first one is usually the decisional what POI. And then the extreme one is where that, okay, that's the final stop you're looking at for price to what? Sell from. Okay, so this is the extreme area, and this is what as well our lower high. This is the lower high here, and this is the lower low. Remember what I said? You only confirm a lower low when market takes out inducement. So right here now, if you had decided to sell the market from here, now let me take the price back. Let's try and see if we can get some, let's see if we can get some, what's it called, confirmation. So price taps into your POI on the first, what's it called, on the first mitigation, right? Price tapped into this POI, this candlestick. Now, based on single candle OB, which I'm going to teach you guys, I want market to what? I want another candle forming to close below this POI here. Sorry, to close below this candle. Let's see if another candle close below. You can see market did not close what? Below. It rejected. So let's see. Now, what I'm now saying is market took out this previous candle low. The power of this other block right here, the power of this candle shifts to this one. So if you can have a candle close below here, then we can chase it. But let's see what happened. You can see market was, this is how we avoided taking a trade here. Right, so price now is going to the extreme. Wait for it to tap into the extreme block. Fine, since he market mitigated that extreme block. So let's see if a candle will close below it. Exactly. So right here we have a what? Single candle mitigation or single candle OB, which you know as the SCOB, right? So now it's now telling me that this whole candle right here is my order block. All right, let me mark it out like this. This green candle automatically what turns to be my order block. So what I'm going to do right now, you can decide to sell off this order block. You can decide to sell from here and have your stop loss right above, right? You target below, you target this low right here. You can decide to sell from there, or which means that all you're waiting for is for price to what? After closing below, waiting for price to what? Move back here and sell, right? Or and now I told you guys the advantage and disadvantage, right? For instance, now selling right from after a single candle OB, what the disadvantage is that you tend to get this what's it called? You tend to get lesser risk to reward, right? So you can see this is just 2.44 RR. But now if you choose to refine, which will give you higher RR, you can go down to 1 minute. So basically, I explained that these are the time frames that we use. If you want to use 15 minutes time frame as your higher time frame, right? Then if you want to make an entry, you move to what? 1 minute. If you're using 1 hour time frame as your higher time frame, if you want to make entries, you move to what? 5 minutes. All right. This is what we use. So now let me go down to 1 minute time frame and see if I can have what? Another single candle what? OB. All right. So this is my whole what? Sell zone. So looking at this right now, you can see we have a break of structure right here, right? You're looking at this structure right here for 1 minute. We have a break of structure right here. Now, after a break of structure, before you sell, you need at least to see inducement as well. Where can we talk about inducement? Where can we see inducement? So this inducement, this is an inducement right here. So looking at this is sell entry. And where's another one? This is another unmitigated what? Extreme point, I mean. So you have two areas right here that is unmitigated. So let's see how price plays around here. So you can see market took out the first one simply because we have the extreme sitting. Simply because we have what? The extreme sitting. And then another way I can tell you guys to confirm structures is by using what? Single candle OB. If you want to use single candle OB mitigation, like, sorry, I'm trying to mix this up, but I'm trying to like tell you something. If you want to use single candle OB, let's say you choose to use single candle OB entry model on the higher time frame, which is 15 minutes. Once you spot your single candle OB on 15 minutes, if you want to make an entry on a POI on 1 minute, still use that single candle OB mitigation. Now, an example is this. Let's try and see something here. This is the first point that price was tapped into, right? This candle tapped into this POI, right? Now, all we were waiting for is for market to close below this green candle that tapped into the OB. What did you see? The market closed below it? No. So this will avoid what? SL for you. So market pushed into the high. So I'll have to delete this off. And automatically, this whole area is my what? My inducement. You can see this is the inducement. See the work of the inducement. It's going to like push traders to want to sell from a certain zone. Meanwhile, you know, quite all right, we have one mitigation right here. We have imbalance and all of that. So using that single candle OB mitigation on 1 hour time frame, on 1 minute time frame. So let's see. This is the candle that tapped into that area. Did price break below? Let's see. So I'm waiting for price to take this out. Okay. So candle closed what? Where is that? Candle closed below. You can see this, the candle closed, yeah, this candle closed below. So once candle closes below, now all you need to do is look at these candlesticks right here. Do we have any unmitigated POI? That's the question you ask yourself. Do we have any unmitigated POI or any unmitigated candle, right? So you can choose to sell from here and put your SL. You can see adjust your SL to the highest point, which is 3.8. Which is 3.8 right there. So you can see price tapped us into this trade, right? As price tapped us into the trade, what do? Go back to 15 minutes time frame. So when you get back to 15 minutes time frame, what's your TP? Your TP would be the 15 minutes low, which is right here. So you can see this is a 6 hour trade. So let's get back to the 1 minute. So this is what we have right here. So now this is the highest point right here. You can choose to put your SL here. You can choose to put it right here, which is 4.6. Or you can put this above this side. So let's see how price plays, right? Fine. As you can see, we hit take profit right here. Price ATP. Now, if you actually want to, I was actually trying to drive you guys through the change of character thing. Right. So going back to the M15, G or nothing. Very good. So going back to the M15, basically, if you get back to the 15 minutes time frame, what can you see? Remember what I told you guys, this is the lowest low that we confirmed after price took out inducement. So we want to see market close below this before we can call it a break of structure. What are we seeing? We are seeing rejection on that zone until we see what break of structure and a closure. So fine, we have what? A break of structure right now. So basically, I can now call this what? A BOS. So I can now test with all my tests, I can call this what? A break of structure. Okay. After calling this a break of structure right now, if you still want to sell, again, obviously, this now becomes your what? Your lower high. This highest point right here becomes your what? Your lower high. Okay. So what we're looking at right now, we want to see inducement on this M15. We want to see an inducement. So where's our inducement? This is the first pullback right here. But now here is a problem. Do we have any unmitigated zone right here that price is likely to tap into? Do you have any unmitigated POI right here? So let me remove this thing here. So do we have any unmitigated POI that price is likely to tap into? Now, here's how to approach this. If you don't have any unmitigated POI that price is likely to tap into, there are two things you do, which I'm going to still teach you guys. That thing is called the IFC candle, right? So basically, price will pull up, break structure, right? Let's say we give an inducements, right? Break structure. So now, let's say in this case right here, after confirming all this sell structure, now you're looking to sell again. When price takes out inducement, you're looking to sell again. But you're now looking at this impulsive leg, and there's no what? Unmitigated POI. Now, here's how it works. There are two things price is likely to do. Price is likely to what? Go above the lower high, sweep it. Now, I mean, sweeping is different from close or from tapping or something, but sweeping is more like when candle goes above the lower high, this lower high, when candle goes above it, it will reject back, right? So more like that thing that price was doing on the lower low here.
right? It will tap the lower low, it will reject back. So price is likely to go there, tap it in, and reject back. So once price reject back, you push down to what? 1 minute time frame. You look for what? SCOB entries and you sell. So let's see what price will do here. But now, if the market goes above that lower high and closes above it, then that's a change of character. So let's see how market plays around here. What can we see? Price closed above this lower high. There was no what? Liquidity, or there was no what? IFC candle what? Showed up right here. So this is a clear what? Break of structure. And this confirms us to have what? A change of character. So after the change of character, what do we do now? What's the first pullback after the change of character? So I see this is the first pullback right here, which is the what? The induced. All right, so let me just send honestly, I don't want to make this more than one video in every session. I don't want to make more than one video in every session. All right, let's send another link though. Let me send another link. Shortly. We'll just have 1 minute. Or rather, let's leave it tomorrow. Let's leave it tomorrow, right? I'll